I'm joined now by banking analyst Ralph Silva of Silva Research Network. Hi, Ralph. We got a loss, not quite as bad as expected because of this impairment related to the Postbank purchase. Strip out the loss, Deutsche already said that the net income was significantly below last year's level. So what's the underlying performance right now at Deutsche?
It's actually fairly positive, and I know the numbers were pretty negative, but it's very positive because even in perfect times, even 5 years ago when the economy was booming, it cost a tremendous amount of money to integrate Postbank into Deutsche Bank. It simply does. But the economies of scale in Germany mean more than anywhere else in Europe because it's such a competitive market. There's so many banks there that the margins are so slim. So the fact that Deutsche is getting bigger is very good for its future, even though right now they have a small hiccup to get through this integration process.
But the critics say that because it's so competitive, because it's so fragmented, it's going to be difficult squeezing profits out of this Postbank business. What do you say to that criticism?
We have seen in the past year and a half to 2 years is that both the consumer base as well as corporations have shown a preference for the larger German banks. Now, this is new because in Germany 5 years ago, it was the smaller banks that got most of the business. But now everybody seems to be going to the larger banks, and that's why Deutsche is pretty well positioned because they're getting many more customers, greater customers than most of the small banks.
Because they have more faith in the bigger banks.
Exactly. Yeah. It's much safer to be in the larger banks, and because of the economies of scale, they can offer better prices, and that's why the consumer base as well as companies are going right to Deutsche.
Let's spread it out a little bit, Ralph. We had UBS yesterday, disappointed specifically on the investment banking side, but money finally is coming in. It's not leaving the wealth management division. What was your takeaway from UBS? Because the shares sank at the end of trading.
And certainly I understand why they sank, but they're getting more private banking customers, and that is what UBS at its core is. And it's the best sign and the first sign of that. It's going to take at least 7 years for the UBS brand to fully recover. This was just the first step. UBS is a long-term buy. Nobody should put it in their portfolio for a short term.
Credit Suisse also disappointed as well. It's all about trading revenues, isn't it? Disappointing UBS, disappointing Credit Suisse. And it's a broader theme, isn't it? Is it a one-quarter phenomena, Ralph? Because September wasn't as bad, was it? That's the message we're getting from the investment banks.
True, but I don't think it was a one-quarter issue. I think that corporations, by and large, have slowed down all their investment practices. They're just not looking for more money in the capital markets. They're not looking to invest as much. They're just keeping the money for safety. And I don't see that changing, at least until the end of this year. So I think we're going to have one more quarter of depressed trading numbers. But retail banking seems to be changing, and that's a very positive step.
Thanks, Ralph. Speak to you soon. Ralph Silva there.